The best index funds can assist you in accumulating wealth by diversifying your portfolio while minimizing fees. Because index funds frequently hold hundreds of securities, investing in one is less risky than investing in individual stocks or bonds. In addition, index funds spread your investment risk across many different individual company stocks or bonds. Today's video shows you the top 5 index funds you must invest in for life. And if you enjoy such content, make sure to like this video, subscribe to our channel, and turn on the notification bell icon to never miss another upload of ours. Here we begin. Let's start with understanding what index funds are. An index fund is a type of mutual fund or exchange-traded fund with a portfolio designed to replicate or track the components of a financial market index, such as the S&P 500 index. A mutual fund that invests in indexes is said to provide broad market exposure, low operating expenses, and low portfolio turnover. In addition, these funds adhere to their benchmark index regardless of market conditions. So how does an index fund work? The term indexing refers to a type of passive fund management. Instead of actively stock picking and market timing, selecting securities to invest in and strategizing when to buy and sell them, a fund portfolio manager builds a portfolio whose holdings mirror the securities of a specific index. The most popular index funds in the United States track the S&P 500. Index fund portfolios only change significantly when their benchmark indexes change. If the fund tracking is a weight index, its managers may rebalance the percentage of different securities regularly to reflect the weight of their presence in the benchmark. Weighing is a technique for balancing the impact of any single holding in an index or portfolio. Now comes the top 5 index funds for you. Number 5. VFIAX. The Vanguard 500 index fund tracks the S&P 500 index, one of the most widely followed stock market benchmarks in the United States. The index encompasses roughly 80% of the investable market capitalization of the U.S. equity market. The fund managers attempt to replicate the S&P 500's performance, with the main difference being the fund's low expense ratio. As a result, the fund is classified as a large blend fund and is the ultimate core large-cap stock holding. Apple, Microsoft, Amazon, Facebook, and Johnson & Johnson are among the fund's top holdings. As of July 19, 2022, the fund's assets totaled nearly $246.72 billion, which were invested in 506 different holdings. The initial investment required in this fund is $3,000 US. The expense ratio is not quite as low as some index fund competitors. The Admiral Shares version of the fund has an expense ratio of 0.04% and a $10,000 minimum investment. Experts consider the fund's risk average compared to other funds in the large blend peer group over the last 3 and 10 years and below average over the last 5 years. However, compared to the fund's peers, the trailing 3, 5, and 10-year returns are above average. The fund's holdings by market capitalization and sectors were largely consistent with the fund's benchmark index. Over the last year, the fund has returned negative 10.66%, 10.56% over the last 3 years, 11.27% over the last 5 years, and 12.92% over the last decade. The fund was established in August 1976. Vanguard, the parent company, is the largest mutual fund provider in the United States, offering a diverse range of mutual funds and ETFs. Vanguard's trademark is low-cost index products, but the company also provides a wide range of actively managed funds. Vanguard's low-cost strategy has resulted in significant asset inflows into its funds in recent years. Number 4. FZROX. The investment aims to provide results corresponding to the total return of a diverse set of U.S. stocks. The fund typically invests at least 80% of its assets in common stocks that are constituents of the Fidelity U.S. Total Investable Market Index, a float-adjusted market capitalization weight index designed to reflect the performance of the U.S. equity market, including large, mid, and small capitalization stocks. The fund aims to provide investment results corresponding to the total return of a diverse set of U.S. stocks. What strategy to follow? Typically invests at least 80% of its assets in common stocks in the Fidelity U.S. Total Investable Market Index, a float-adjusted market capitalization weight index designed to reflect the performance of the U.S. equity market, including large, mid, and small capitalization stocks. Using statistical sampling techniques based on capitalization, industry exposures, dividend yield, price-earnings ratio, price-book ratio, and earnings growth, the Fidelity U.S. Total Investable Market Index returns are attempted to be replicated using a smaller number of securities, lending securities to generate income for the fund. Number 3. VVIAX or VTV. Value stock funds have proliferated in the fund universe as the case for value investing grows stronger. Vanguard, the world's largest mutual fund company, has one of the most extensive fund selections for developing a diversified, core satellite investing strategy centered on value stocks. The Vanguard Value Index Fund is a mutual fund that invests in the Vanguard Value Index. Admiral Shares Funds is one of the market's largest and most successful value funds. The fund, considered a core holding, invests in stocks that comprise the CRSP US Large Cap Value Index over the long term. The fund invests in various industries, including finance, technology, healthcare, and oil and gas. Its top holdings include United Health Group Incorporated, Johnson & Johnson, and Berkshire Hathaway Incorporated. Over the last 10 years, the fund has returned 13.74%. Over the last 5 years, it has returned 12.52%. Because of its low turnover, the fund's expense ratio of 0.05% is among the lowest in its category. The fund's minimum investment is $3,000 because it is an Admiral Shares fund. It is also available as an ETF, trading under the symbol VTV. Number 2. FNILX. Fidelity introduced 3 new index funds for its clients to invest in 2018. FZILX was one of them, which is an international index fund. This fund was created with a 0% expense ratio to attract investors to Fidelity's over other investment products. The S&P 500 isn't even mentioned in the name of Fidelity's large cap index fund. While this may appear strange, it may indicate that it does not necessarily track the S&P 500. In addition, S&P assesses a licensing fee of 0.03% of funds under management and a fee of $600,000. However, there is no one-to-one trading relationship between FNILX and the S&P 500. This is because the underlying strategy is slightly different. FNILX invests in the 500 largest American companies, which is not the same as the S&P 500. While not perfectly aligned with the S&P 500, this is the closest Fidelity can get without creating an S&P 500 fund. At the end of the day, the desired outcome is still achieved and at no cost to the investor. Looking only at market value, FNILX's strategy may expose it to more momentum. However, it will also likely increase exposure to companies with less than stellar financial standing. The S&P 500 avoids companies with poor financial standing due to its stringent inclusion criteria. However, it could be argued that FNILX provides a more efficient alternative to the S&P 500. Rather than waiting for quarterly rebalancing, as the S&P 500 does, FNILX rebalances fairly frequently by the market's current position. In addition, because of the fund's greater flexibility, it will frequently own companies before they are included in the S&P 500 and sell companies before they are dropped. Furthermore, contrary to the previous argument, FNILX outperformed the S&P 500 during the only stock market crash in their shared history. While it's unfortunate that there isn't more data to examine, this indicates that the agility of FNILX may prove to be a better method of handling crashes. Number 1. VQNX. Vanguard Growth and Income Investor is a mutual fund equity report fund that investors should consider. VQNX has a Zacks mutual fund rank of 1, strong buy, based on 9 forecasting factors such as size, cost, and performance in the past. Vanguard Group, headquartered in Malvern, Pennsylvania, is the manager of VQNX. The Vanguard Growth and Income Investor debuted in December 1986. As of the most recent available data, VQNPX has amassed approximately $2.96 billion in assets. A team of investment professionals currently manages the fund. Investors are naturally looking for funds that perform well. VQNPX has a 5-year annualized total return of 12.7%, ranking at third in its category. When analyzing a fund's performance, keep the standard deviation of the returns in mind. The lower the standard deviation, the lower the volatility of the fund. VQNPX's 3-year standard deviation is 19.39%, compared to the category average of 17.11%. But concerning the risk factors, investors should be aware that the fund has a 5-year beta of 1.01, implying that it is theoretically as volatile as the market as a whole. Because alpha represents a portfolio's risk-adjusted performance relative to a benchmark, in this case the S&P 500, it is important to consider this metric. With a negative alpha of 0.13, managers in this portfolio have difficulty selecting securities that outperform the benchmark. Let's now talk about its holdings. The emphasis of this fund is primarily on equities traded in the United States. This fund currently holds approximately 98.65% of its assets in stocks, with a market capitalization of $428.23 billion. The fund is heavily invested in the following market sectors: technology, finance, and retail trade. Turnover is 64%, implying that the fund makes more traders than comparable funds on average in a given year. What are the expenses investors should pay close attention to? VQNPX is a no-load fund in terms of fees. It has a lower expense ratio of 0.31% than the category average of 0.92%. So regarding cost, VQNPX is less expensive than its competitors. While the product requires a $3,000 initial investment, investors should remember that each subsequent investment must be at least $1. If you are planning to invest in index funds, consider these and let us know your views in the comments below.